So the market is officially crashing, guys, and I brought in someone that knows a lot about this topic, and here he is to actually talk about it. Alright, so hey guys, my name is Tommy, and to be honest, I'm a little worried because the market literally just crashed and I'm losing around 10% of my entire portfolio. And to be honest, bro, it's not just that, but the market is crashing. But on top of that, I have Yahoo Finance, CNN, everyone is saying that I should sell right now because of the coronavirus. And I'm kind of scared about the entire thing, and I don't know what to do. So if you ask me, I'm actually planning on liquidating all my stocks right now just to try to make a profit again. Alright, don't sell just yet. Just give me a second to make this video and break all the details down, and that way you have a better idea of what exactly you should do. Alright, I won't sell until you tell me so. Thanks for the advice. By the way, guys, that was actually my twin brother. But to be honest, guys, you know, I get a little mad whenever I see the market crashing, okay? It's kind of like natural, but the thing that makes me mad is not the market crashing, it's like a correction, but the whole point is the media. I don't like the media. The scare people, CNN, Yahoo, Google, everyone is talking about, hey, the coronavirus is happening, just go out there, sell everything, and people are starting to panic. So my goal for this video, guys, is to show you exactly how I invest my money, my entire portfolio, cash, and also stocks and bonds, and how everything works to assure that whenever a recession or anything has happened with the money and the coronavirus and also Ebola, that my money is safe, okay? Now, the first thing I do want to say is this, guys. This is not the first time this happens. And to be honest, if you guys remember the coronavirus, yeah, that just happened just now, so you should remember, but also the Ebola virus and also the swine flu, these are all things that affected the market in some way. So it's not the first time this happens, and it definitely will not be the last. But before you start thinking about, hey, I'm gonna move to somewhere else because I don't want to get affected, before you do that, smash the like button, but smash it gently, and also click the subscribe button, and that way you guys get notified every single time I post a new video, which is every single day. And if you guys don't know me, my name is TommyBryson, and I'm also an accountant. Now, the first thing I want to break down, guys, is basically my stock portfolio, how it works, and what is it made of exactly. Now, the main idea for my portfolio is that I want to make sure that all my eggs are definitely not in one basket, because if the coronavirus strikes, well, that basket will be like done for, okay? Because it's just one basket with everything inside. So what I like to do is maintain all my investment into different baskets, and that way, if one gets taken down, I have the other ones to actually make sure my portfolio goes like this right here and level up, but not like this all the way down. You don't want that. So my investments are made out of ETFs into stocks and also ETFs into bonds, and on top of that, cash, which I do keep in hand, and on top of that, my business, okay? So into ETFs right now and stocks and all this fancy stuff, I only have around 5% of all my money inside of this stuff because I do have a very high income. Now, the first thing is this, guys. My first investment out of the 7 when it comes to ETFs is actually the S&P 500 that's made by Vanguard and tracks the entire market every single year and mirrors the market, and that way you get a return of the average market return every single month. Now, in here, I actually invest around 37% of all my money towards this right here, okay? All my invested money towards this, not all my money, okay? That's the entire point here. And by the way, guys, right now, the market is actually down by around 2% because, again, every single person is actually freaking out. But it shows you guys that, you know, the S&P 500, if you invested some money, and like, for example, like literally like 23 years ago, the amount of money you would have now is a lot. And if you guys want to find out exactly how much exactly, if you invested $1,000 and contributed every single month around $100, I'll tell you guys at the end of the video, so stick around for that. But the point is, the S&P is very solid, and over time, it always averages out. And now, the second types of investment that I actually have are treasury bonds and also corporate bonds. By the way, all the details with the ticker symbols and the amount of money I have in there are down in the description down below, so check that out if you actually want all the details. Now, the main point is this: I put 10% into government bonds and then 10% into corporate bonds. Now tell me why exactly? Well, because I know for a fact when the market crashes and it goes down, bonds tend to actually stay a little bit leveled, and here's why. Because, guys, whenever the market actually goes down, usually everyone wants to actually invest into bonds, and that's why right now my bonds, my treasury bonds, are actually up by 0.09% because now people are actually driving up the value because people are investing into them because, again, oh my gosh, the market is crashing. The answer is that's normal, and the reason I have these in my portfolio is mainly because I just want to have balance. If I have balance, if the market is going down, okay, but my bonds stay leveled, and that way everything comes here and it's kind of like balanced out, okay? I don't want to lose all my money, and that's why I put 20% of my money into bonds, either treasury bonds by the government or corporate bonds. By the way, I know for a fact corporate bonds are more risky, but they also give you more returns. So that's why I also have 10% and 10%, and I kind of split it off to actually balance it out also. And now when it comes to the third part of my investment, guys, well, I kind of also invest money into more risky investments, and here's why. Because again, I am younger, and because I am young, I'm 22 years old right now, tomorrow I'll be 23, but the whole point is because I'm younger right now, I kind of absorb some of that risk, and then later on it averages out, okay? That's the whole point here. So right now I can afford to be a little bit more less conservative. So right now I do invest into emerging markets, and also on top of that, small cap markets, and also real estate ETFs. Now if you want all the info, again, down below, but on top of that, guys, in here I only have 25%, so it's not like, hey, if this crashes, everything is done for. No, all my money is still secured. And again, since this stuff is ETFs, it's made out of different investments, and that way it's not like, hey, I invested into this company, it went down, I lost my money. The answer is no. These ETFs are made out of various different companies, and that way your boy is more secured. Now, the last type of investment I actually have is actually international investment. Tell me why? Well, the answer is, guys, very simple. America is great, but you never know. So you always want to have some type of aspect of your money internationally, and all the people say all the time, Tommy, that's risky, you can't trust China, you can't trust Japan, you can't trust any of these countries. The answer is, I don't really care about that stuff. What I care about though is the return of my money, and this shows me that I have a balanced portfolio, and that way if anything happens, well, my money is more secured. But in here, I only really put down around 15% of my money into this part of my portfolio. So again, only 15%. So that's basically it for my entire portfolio. So I put into, for example, the S&P 500, into bonds, into small caps, like more risky and stuff, and then also internationally, and that way I am more secured. And overall, guys, the reason I chose to invest like this is basically because I know for a fact when the market does go down, not none of this like, hey, Ebola, I don't care about that stuff, although it is important to stay safe and stuff like that, I get that, but the whole point is, when the market really goes down, when the stuff hits the fan and it goes down crashing, well, my portfolio will not lose that much value, because usually when stocks go down, well, bonds go up a little bit, okay? And when stocks go down in America, well, the international ones usually go up just a little bit or stay like a little bit more like balanced out, So the point is, you want a perfect harmony, okay? And by the way, in cash, I do keep a lot of money on the side, but that's to actually save for real estate. So right now, I have around 5 figures in cash, like high 5 figures, like for example, like around, I'll tell you, okay, $65,000 in cash just to put it towards real estate, and that way I have more diversification. And in my business, I also have 6 figures, and that way I maintain structure here. Again, I only put 5% of my money into ETFs and bonds to maintain my structure, but it's not like I'm gonna put all my money in that stuff, because usually, you want to keep all your eggs in one basket, even if that basket is the entire stock market, okay? That's my point here. Now, you're probably wondering, okay, Tommy, but what's the next thing you actually do? How much money do you invest, and how do you actually invest it? Well, the answer is very simple, guys. I am a very simple person, and what I do is I invest with an app called Acorns, okay? Now, I am not affiliated with them whatsoever, so I'm telling you this because I have been doing it for a while now, but this is what I do. And now, guys, secondly, aside from investing into a very diversified portfolio, what I also love to do is just plainly and disrespectfully just ignore the entire market. Just to find out that my stock lost money, I had to listen to a subscriber tell me about it, because I had no idea, because I don't check my investments every single day, maybe once a month or so, because I know my portfolio is going to last the test of time, okay? That's the point here. So, guys, if you tell me, Tommy, but what if my investments are falling right now? Everyone's saying to sell. Well, the entire point is, guys, that the media's job is to get you riled up, to click on their entire ads, and then boom, they get revenue, boom, they do it again, and then boom, now everyone's going crazy and everyone's selling. But in reality, even I think it was like Black Monday. It was like around, I think it was like in the 1800s or the 1900s, when the market actually lost around 23% of its value, and then the media went crazy, and then a few months later it bounced back. And that's the entire point, you know, the market always bounces back. And if it doesn't, okay, if it doesn't for more than like 10 years or 20 years, then the problem is less about, oh my gosh, the market, and more about like, oh my gosh, what is going on in the world and what is going on with America, okay? That's when things actually get sketchy. But overall, guys, the market, the history of the market, okay, it all shows that overall, over time, the market does tend to balance out, and that's the entire point. When the market corrects itself, people freak out, but overall, things will balance out. For example, guys, okay, what would have happened if the day I was born, my mom would have invested $1,000 and contributed every single month around $100 into the S&P 500 and just left it there? Again, the tech boom happened, and then the tech crash happened. Again, the housing bubble happened, and then it also unhappened. So what would have happened with all this money, right? The answer is, well, she would have invested around $28,600, but then that money right there, that $1,000 that she put in $100 every single month over 23 years, that money right there at a 7% gain would have actually grown to, guess how much, guys? It would actually grown to around $89,756 if she just left it there and ignored it until the day I'm 23 years old now. So the point is, over time, guys, overall, the market balances out and it always clarifies everything. So my guess is, and what I do is, based on information from Warren Buffett, Vanguard, and everyone else who's an expert out there, is that I invest my money, and over time, the market will give me a profit. That's the entire point here. Now, and by the way, guys, I also have a calculator down below for my mom's example if she invested that money. So if you want to try that out and have some fun, check it out. Link down below. But guys, here is the third thing I love to do when it comes to invest, and that's basically that I invest whether it's raining, whether it's snowing, whether it's sunny. I invest money every single month, no matter if the market is up, down, or sideways. I don't really care, okay? What I like to do is that every single month I invest around $500 in my portfolio that I told you guys about. Whether it's raining or snowing, I don't care, okay? Now, the whole point is this, guys. I did some math, and right now I have invested around $10,000. But now, if I keep investing $500 every single month for the next 40 years when I turn 33 years old, well, that money at a 7% interest rate plus 2.35% in dividends at a 9.35% total profits every single year, that money would be worth around $2.4 million, although all I actually invested was around $240,000. Now, if you want to have some fun too, guys, I have a link down below to the entire calculator I use for this. But the point is, guys, you know, investing in the long run. That's what I do. So if you want to be freaking out right now because, oh my gosh, the coronavirus or a recession is happening or the real estate market just burst or the entire like index bubble, like all this stuff right here, in the end, none of this will matter because the market always goes up. It always goes down, it always goes up, 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 up. But over time, the market shows that it always averages out. And that's what you're looking for as an investor, okay? And guys, that's basically it. Comment down below and let me know. What do you guys think about my portfolio? Is it good? Is it bad? Comment down below. Let me know. And if you guys enjoyed this video, like this video, really appreciate it. And also, go ahead and also destroy the subscribe button. And on top of that, if you want to talk to me one-on-one, uno, just DM me on TommyBryson. And on top of that, guys, if you guys want to watch a full video on my entire Acorns portfolio, watch this video right here, and also click my face right here to also subscribe to the channel right now, and I'll see you guys tomorrow. Thanks for watching, and as always, peace.